The Trump administration just did something that changes everything for XRP. And I don't say that lightly. The comptroller of the currency, Jonathan Gould, has officially green-lighted Ripple and other crypto firms to pursue national banking charters and access the Federal Reserve's payment rails directly. The Biden-era policy known as Choke Point 2.0, which forced banks to get government permission before touching crypto, is being rescinded. The new default is permissible unless prohibited. Ripple can now build a bank, bypass third-party intermediaries, and settle transactions directly through the Federal Reserve using FedNow and FedWire. Lower costs, faster settlement, no middleman. That puts Ripple on the same level as J.P. Morgan, Citibank, and Bank of America. And today, the Miley Fool published an article with a headline that stopped me in my tracks. Could buying XRP today set you up for life? That question from one of the most widely read financial publications in the world would have been unthinkable a year ago. The fact that they're asking it now while Goldman Sachs holds $153 million while the SEC calls XRP a commodity while the Trump administration is literally opening the banking system to Ripple, tells you that the narrative around XRP has fundamentally shifted. Before I continue, this is not financial advice. I'm sharing publicly available information for educational and entertainment purposes only. Always do your own research and consult a professional. Now, let me take you back for a moment because to understand why today's news is so significant, you need to understand what Choke Point 2.0 was and how much damage it did. In 2021, Biden-era regulators at the OC, the FDIC, and the Federal Reserve issued guidance that effectively required banks to get explicit supervisory approval before engaging with any digital asset activity. That sounds like a reasonable safety measure, but in practice, it created an invisible wall between the banking system and the crypto industry. Banks that wanted to custody crypto, settle stablecoin transactions, or partner with companies like Ripple had to go through a lengthy approval process with no guaranteed timeline and no clear criteria for success. Most banks simply didn't bother. The risk wasn't worth the regulatory headache. This policy became known as Choke Point 2.0, named after a similar program during the Obama administration that targeted other legal but controversial industries by pressuring their banking relationships. For crypto, the effect was devastating. Companies that were fully legal and compliant couldn't get bank accounts. Exchanges lost banking partners overnight, and projects like Ripple that were building infrastructure for the banking system couldn't actually plug into the banking system they were designed to serve. What Jonathan Gould just did is flip that entire framework on its head. Instead of requiring permission to engage with crypto, the new default is that crypto activities are permissible unless specifically prohibited. That's not a small tweak. That's a philosophical reversal of how the U.S. government relates to digital assets. And for Ripple specifically, it means the path to becoming a fully operational bank with direct Federal Reserve access is now clear. Let me explain what it means for Ripple to have direct access to the Federal Reserve's payment system. Because this is the single most important infrastructure development in XRP's history, and most people don't understand its significance. Right now, when a bank sends money internationally using SWIFT, the transaction goes through a chain of correspondent banks, each taking a fee and adding time. A cross-border payment can take 3 to 5 business days and cost anywhere from $20 to $50 in fees. The process involves printed Nostro and Vestro accounts where banks have to park capital in foreign countries just so they can settle transactions when they arrive. Trillions of dollars sit idle in these accounts around the world, tied up as a cost of doing business in the legacy system. Ripple's technology does the same thing in 3 to 5 seconds for a fraction of a cent. XRP acts as a bridge currency that eliminates the need for printed accounts. Money goes in as one currency, converts to XRP in seconds, and arrives as the destination currency moments later. But until now, Ripple had to work through existing banks as intermediaries to access the payment system. They couldn't plug directly into the Federal Reserve. That just changed. With a national banking charter and access to FedNow and FedWire, Ripple can settle transactions directly at the central bank level. Let me explain what those two systems are because they matter enormously. FedWire is the Federal Reserve's real-time gross settlement system used for high-value temporitical payments between banks. It processes trillions of dollars every day. FedNow is the newer instant payment system that the Fed launched to enable 247 real-time payments across the U.S. banking network. Together, they represent the backbone of America's payment infrastructure. Access to these systems means Ripple doesn't need to go through J.P. Morgan or Bank of America to settle transactions anymore. They can do it themselves at the Federal Reserve level using their own technology. This is the difference between being a technology vendor that banks choose to use and being a bank yourself that competes with them directly. Ripple just went from selling shovels to the gold miners to mining the gold itself. Now, let me connect this to Ripple National Trust Bank because the pieces of this puzzle have been coming together for months. In December of 2025, Ripple received conditional approval from the OC for a National Trust Bank charter. That was the first step. The trust bank is designed to custody and manage reserves for Rust, Ripple's stablecoin that has now surpassed $1.56 billion in market cap. The trust bank doesn't take deposits or make loans like a traditional bank. Instead, it provides institutional-grade custody, settlement, and treasury services for digital assets. With the comptroller now actively inviting crypto firms to pursue full banking charters, Ripple's trajectory goes beyond the trust bank. The end state is a Ripple entity that can hold reserves at the Federal Reserve, settle transactions through FedNow and FedWire, custody digital assets for institutional clients, and operate Rust as a regulated stablecoin within the federal banking framework. That's not a crypto company anymore. That's a financial institution. And this connects to every other development we've covered over the past 2 weeks. The SEC commodity classification means XRP can be used by any regulated institution without legal risk. The Clarity Act would make that classification permanent federal law. The ETF infrastructure gives institutions a way to gain exposure. The DTCC connection through Ripple Prime links XRP to Wall Street's clearing system. The Evernorth Nasdaq listing under ticker XRPN creates a MicroStrategy-style accumulation vehicle, and now direct Federal Reserve access means Ripple can operate as a fuller vice financial institution competing at the highest level of global finance. The Miley Fools model from yesterday shows how this translates to price. Swift handles $150 trillion annually. If XRP captures 14% of that volume, which is based on Ripple CEO Garlinghous's projections, the transaction velocity model puts XRP at $20 by 2030. Even the bear case of just 1% capture puts it at $4. And these models were built before the banking charter news, before the SEC commodity classification, and before the March 27 ETF deadline. Let me walk through the math step by step because understanding this model is how you evaluate whether XRP is overvalued or undervalued at $1.39. Swift moves $150 trillion per year. 14% of that is $21 trillion. Divide by 365 days, that's roughly $57 billion per day flowing through the XRP network. Each XRP token can be reused multiple times per day because transactions settle in 3 to 5 seconds. Assuming each token facilitates multiple transactions daily and the circulating supply is 61 billion, the implied price per token needs to be high enough that the total network value can support 57 billion in daily settlement. The math gives you roughly $20 per token. At 1% of Swift volume, you get about $4. At 7%, you get about 10. The model scales linearly with capture rate. Now, here's what Caitlin Long, CEO of Custodia Bank, said that I think captures the real endgame. She said, the real prize isn't today's $313 billion stablecoin market. It's the $5.7 trillion in U.S. demand deposits that are about to be turned into tokenized bank deposits. Think about what that means. Every dollar sitting in a checking account at J.P. Morgan, Bank of America, or Wells Fargo could eventually be represented as a tokenized deposit on a blockchain. The bank still holds the deposit, but the representation of that deposit, the ability to move it, settle it, and program it, lives on-chain. That's $5.7 trillion of activity that could flow through blockchain networks. And a Ripple with its banking charter, its Rust stablecoin, and its XRP bridge currency is now positioned to compete for that market, not from the outside looking in, from inside the banking system itself. The comptroller just handed them the keys to the front door. The political context behind this is worth understanding because it explains why the timing is happening now. The crypto industry spent over $250 million electing pro-innovation candidates in 2024 with up to 278 pro-crypto members now in Congress. The political will to obstruct has evaporated. The administration made crypto a strategic priority on par with semiconductor manufacturing and AI infrastructure. The president personally attacked the banks on Truth Social for trying to block the Clarity Act, and the comptroller is using existing authority to front-run the legislative process, not waiting for Congress to act. The offshore competitive threat is the other pressure point. Stablecoin liquidity has been bleeding to jurisdictions with clearer rules. Europe's MiCA framework is operational. Singapore, the UAE, and Japan have all established clear crypto regulatory environments. The U.S. has been losing ground to these jurisdictions, and the administration is moving aggressively to reverse that before the $3 trillion stablecoin market projected for 2030 takes shape outside American borders. Now, let me address the bear case honestly, because the Miley Fool raised legitimate concerns. They noted that some of XRP's previous catalysts, the ETF launches, the SEC settlement, the favorable regulatory shift, are now in the rear-view mirror. The momentum from those events has run its course, and XRP has struggled to hold above key resistance levels. They also noted that many investors are staying away from riskier investments right now due to the Iran war, tariff fears, AI disruption concerns, and rising layoffs. These are real headwinds. XRP fell to a 139 today with selling volume triple the daily average. BNB just retook the number 4 spot. The broader crypto market is down 4.5% on the week. The macro environment is genuinely difficult right now. But here's my counter. The catalyst behind us removed barriers. The catalysts ahead of us create opportunities. The SEC settlement removed the legal cloud. The banking charter opens the Federal Reserve. The ETFs launched. The new ETF approvals could bring $8 billion. The SEC classified XRP as a commodity. The Clarity Act would make it permanent law. The NASDAQ listing creates a new demand vehicle. These are forward-looking catalysts that haven't been priced in yet because the macro storm is suppressing everything. Snorts, and the on-chain data supports the idea that we're near a bottom. Glassnode's SOPR is approaching 1, meaning profit-taking is drying up, which historically precedes bottoms. Nuppel is in latest-stage capitulation territory. Insufficient reserve errors spiked to 372,000, a 3-year high, showing surging network demand. 7.7 million wallets, 3 million daily transactions. Whale flows positive for the first time since November. Every bottom indicator is flashing while the fundamentals are the strongest in XRP's history. March 27th is 5 days away. The SEC's final ETF deadline, the options expiry with 14.6 million concentrated at the $140 strike, up to $8 billion in potential institutional inflows if the remaining applications are approved. Approval odds above 90% given the commodity classification precedent, and XRP sitting at a $139 in extreme fear territory. The administration opened the banking system to Ripple. The SEC classified XRP as a commodity. Goldman Sachs holds $153 million. The NASDAQ listing is filed, and the biggest ETF deadline in XRP's history is 5 days out. Could buying XRP today set you up for life? The Miley Fool asked the question. The math says the answer depends on how much of the global payment system XRP captures. At 1% you get $4. At 7% 10, at 14% 20. At Standard Chartered's 2030 target 28. The infrastructure being built right now, the banking charter, the Federal Reserve access, the DTCC connection, the stablecoin ecosystem, the institutional ETFs, all of it is designed to maximize that capture rate. Whether that's life-changing depends on your position size and your time horizon. But the setup, the convergence of political support, regulatory clarity, institutional infrastructure, and network growth at a price 60% below the all-time high has never been better in XRP's 13-year history. And the clock is ticking 5 days. Now, let me take 5 minutes to put everything we've covered over the past 11 days into one comprehensive picture, because when you see it all together, the magnitude of what's happening becomes undeniable. On March 12th, Goldman Sachs was revealed as the single largest institutional holder of XRP ETFs at $153.8 million. Let me dwell on this for a moment, because I don't think the community fully appreciates what Goldman's position represents. This isn't a retail investor buying on Coinbase. This is the most powerful investment bank on Wall Street, with a total crypto portfolio exceeding $2.3 billion, making a deliberate decision to spread $153 million across 4 different XRP ETF issuers. They bought Bitwise, Franklin, Grayscale, and 21 shares. That level of diversification tells you this wasn't a one-time trade. It was a portfolio construction decision made by a team of analysts who evaluated XRP's risk-reward profile and said yes. And they did it while XRP was falling. The 13F filing covers Q4 2025, when XRP was in the middle of its slide from 365. Goldman wasn't buying the peak. They were accumulating during the drawdown. That's how institutional money operates. They buy when retail sells. They position when fear is high, and they hold through volatility that shakes out everyone else. On the same day, MasterCard launched their crypto partner program with Ripple among 85-plus partners. Ripple launched a $750 million share buyback at a $50 billion valuation, and the SEC and CFTC signed their historic Memorandum of Understanding. On March 13th, XRP broke its months-long descending trend line on triple volume. On March 14th, the manipulation debate erupted. On March 15th, the 920% tokenization explosion was revealed and whale flows turned positive. On March 16th, XRP smashed through the 50-day EMA. On March 17th, XRP touched a $160, flipped BNB, and Korean volume exploded 115%. On March 18th, the SEC officially classified XRP as a digital commodity, and Evernorth filed for NASDAQ under ticker XRP. On March 19th, the Fed dropped its hawkish bomb, but XRP-specific catalysts remained intact. On March 21st, a former Goldman Sachs analyst predicted $1,000, and the Miley Fool published their $20 velocity model. And today, we learned that the comptroller has opened the Federal Reserve to Ripple. That's over 20 major catalysts in 11 days. I've been covering XRP for a long time, and I can tell you with complete honesty that nothing in this asset's 13-year history comes close to this concentration of structural, regulatory, institutional, and political developments in such a compressed time frame. Previous bull cycles were built on 1 or 2 catalysts playing out over months. This cycle has 20 catalysts hitting in less than 2 weeks, and the price is still at $139 because the macro environment is suppressing everything. But macro is temporary. That's the single most important thing I need you to understand. The Iran conflict will resolve. Oil will come down. The Fed will eventually cut. Risk appetite will return. And when it does, XRP won't rip-rick based on today's fundamentals. It will rip-rick based on the fundamentals that exist at that moment, which includes every single one of those 20 catalysts, plus the March 27th ETF approvals, plus the Clarity Act, plus whatever else Ripple announces between now and then. The Miley Fool asked, could buying XRP set you up for life? Let me answer that with the most honest framing I can give you. At $4, a $10,000 investment at current prices becomes roughly $29,000. That's not life-changing for most people. At $20, that same $10,000 becomes roughly $144,000. That's meaningful. At $28 per Standard Chartered 2030 target, it becomes about $200,000. And at the former Goldman analyst 1,000 target, which requires assumptions I personally find extremely ambitious, it becomes over 7 million. The realistic range for most credible analysts sits between $4 and $28 over the next 4 to 5 years. Even the low end of that range represents a triple from current prices. The high end represents a 20x. Whether that sets you up for life depends entirely on two things: how much you're willing to allocate and how long you're willing to hold. The infrastructure says the long-term direction is up. The macro says the short-term direction is uncertain. Your job as an investor is to decide how to balance those two realities for your specific situation. What I can tell you is that the comptroller of the currency just opened the doors of the Federal Reserve to Ripple. The SEC just classified XRP as a commodity. Goldman Sachs is holding 153 million. A NASDAQ-listed treasury company is being built. The Clarity Act is advancing, and March 27th is 5 days away with up to $8 billion in potential ETF inflows and 90% approval odds. The people who build wealth in crypto never did it by buying when everyone else was comfortable. They did it by buying when everyone else was afraid and the fundamentals were screaming that the fear was wrong. Right now, the fear is at maximum. And the fundamentals have never been stronger. Those two things don't stay in conflict forever. Macro storms pass, infrastructure lasts. Smash that like button. Drop a comment telling me your honest answer to the Miley Fool's question. Could buying XRP today set you up for life? I genuinely want to hear from this community. Subscribe and hit the bell because March 27th is 5 days away and I'll be covering it in real time. Share this with someone who needs to understand what the comptroller just did and what it means for XRP's future inside the American banking system. I'll see you in the next.